Good afternoon, Mr. Ryan. How are you doing today, sir?
Hey, what's happening, Mike? How are you?
Doing well. Another topic that I feel like we keep getting hit with is, people talking about how soft the market is and how bad it is, and that's probably fueled by mainstream media, right? But I think a quick little look at just some data here will help dispel a little bit of that and give people access to some information that they aren't receiving from other sources, right?
Yeah, it'd be great. I mean, what do you got pulled up there? Let's take a look.
Yeah, so this is the entire Antelope Valley, a rolling 12-month glance at the market. So we've got the number of listings, and you can see how they trended up and down. The price of the homes that sold, again, you can see that it trended down a little bit. So yes, the market is a little bit soft, but it is far from crashing, right? Come down a little bit. We've got the absorption rate in months. We've got the list price to sales price ratio, some days on market. So this one, the days on market does show a bit of softening, but that's not on values. That's just on how quickly homes have sold over the last year, right? Volume is irrelevant. We don't really care about that. And then just the hard stat numbers on those categories real quick. What do you want to hit on first?
Well, I think it's important to, kind of talk about like how far back have things rolled? Because we hear all the time, we are kind of two camps. Like one is a crash, one is a correction.
Yep.
And from what I've seen, on my own side,
Mm-hmm.
it's definitely more on the corrective side of things.
For
And
sure.
so you're going to scrub off maybe some of those peak months where inventory was incredibly low, rates were still, relatively decent, and people were just bidding like crazy to get into their house. So we
Yeah.
probably lose a little bit of that, like if we were to top it off. And if we're kind of doing this year over year look back,
Yeah.
net, what did we lose 20%? Where were we at, from say January of 21 to January of 22,
Yeah. 22 versus 23.
or 22 versus 23? Yeah,
Yeah.
there you go.
But so again, like the mainstream media would have you believe that we just fell off a cliff, right? That the sky's falling and that we're going to have a huge foreclosure crisis and whatever, right? And that buyers should pull in their horns and not buy a home because they're going to regret it. So just to look at that real quick. So from here, and for those who have tiny screens that they're looking at this on, in January of 2022, the average selling price was $452,200 versus January of 2023, it was at 439,305. It's a
Okay, so
2.85% rollback, less than 3%.
yeah, yeah,
That's not a
not
big
not
deal. I mean,
terrible.
we see monthly fluctuations larger than that, and that's a 12-month window. That's not a big deal in my eyes.
No, from the lending side, to give you kind of perspective on that, if we take a look, so you were talking 2022 going
Mhm.
into 2023. So January 22, January 23.
Yep.
There's a big difference in those 2 years because leading up into January, we had October, November, December of 2021 leading to January 22.
Yep.
We had much, much, much lower interest rates.
Yeah.
And leading into January 23, we had the peak, at least in the last decade, of interest rates, if not maybe 20, 30 years. So
Yeah.
we had a much, much higher rate environment. In fact, November would have been our peak for interest rates being in the sevens for a little bit.
Yeah.
And so rolling into these numbers, it shows how resilient the market actually is.
Mm-hmm.
And it's purely fueled by how many buyers need housing and that
Yep.
lack of supply, right?
Yeah.
Not having enough homes on the market is keeping these prices kind of where they are. Because really to only see a 3% kind of reduction, that's not that bad considering how much more expensive it is to finance that same exact home compared to the previous year.
Yeah, so I did those numbers offline this morning and I was looking at it. And so interest rates went from about 3% average for January of 22 to 6.25% average for January 23, right? So they doubled. That's a huge factor. And that's, so the interest rates doubled, but the average selling price only came down less than 3%. That is kind of mumbo jumbo for people that don't really know numbers or love them like we do. The affordability on that, the monthly payment from January 22, so average selling price, average interest rate versus January 23 average selling price, average interest rate, we were up about 30% on the cost of the monthly payment for buyers. That's brutal. So we have a 30% increase on what it costs for a buyer to now buy and own a home on a monthly basis, but prices only rolled back less than 3%.
Right. Which, to me, when I hear that, 30% makes me just freak out. And I'm like, oh my God, that's so expensive. But at the same time, when I pause and kind of think about it, I also know that the incomes were increasing over time. And so 30% is a lot. I mean, we're feeling it literally everywhere. Our utility costs, our grocery bills, everything is more expensive, including our housing, like we just mentioned.
Yep.
But you have more income coming into the household. Now, again, not every household has more income, but just nationally, if we take a look at it, 2021, the average household brought in $9,000 more for that year. In 22, it went up another 9%. So that went up almost to $10,000 now. So between those 2 years, there's almost 20 grand more coming in per household just in earnings. Yep. And so when you back out taxes and everything on it, yeah, our housing went up a bit, but we also were making a bit more money. So our costs went up. Our ability to pay for it went up as well, a little bit outpaced. And so that's why we have some rollback. We have some settling.
Actually, so I mean, you're saying that, and I'm running numbers through my head, and you said it was about 20 grand over the 2 years, right? And it was about 10 grand for the 1 year, right? So the monthly payment difference was about $800 a month. Was that 30%? 8 times 12,
9 grand is
$9,600.
Yeah.
You said income was up 10 grand. The housing expense versus income basically washed. Everything else is more expensive.
Yeah, there's gross earnings. So you have some money that you're going to lose to taxes, right? Sure. So it's not dollar for dollar. So clearly it's more expensive. But our point is, it didn't go up without some ability to repay that. That also went up as well. So the gap isn't quite as wide as sometimes we think.
Yeah.
This is another reason why we have to look at real estate very local. Because if we look at national statistics, it's going to show, like national is very similar to what we just went over here locally. National hasn't really rolled back all that much. There are some markets that were incredibly heated.
Oh, yeah.
And when they settle, they're coming back quite a bit. They're coming back, 15, 20% year over year.
Yeah.
We're not quite seeing that on our side. Our rollback, our softening isn't as drastic as some of those markets.
No.
But if you only hear of those other markets, then you would expect the same, because sometimes I think the consumer thinks all real estate is up or down the same, but it's not. It's very local. And so it's important to just remember that, as you're out there kind of looking at housing.
For sure. I agree 100%. And of course, the news only likes to talk about the extremes, right? So if they take a market like, say, Phoenix, which we know just got hammered, but they only got hammered because of the steep run up that they had in the beginning of it, because of all the people leaving California and other states that went to Arizona because it was retirement friendly, right? But that's what the news is going to talk about. Just like, if foreclosure rates doubled, right? They went from 0.25% to 0.5%, and they say that it doubled. That sounds terrible. Never mind that it's negligible versus historic averages of like 3%, right? So again, just like to your point, focus on your own local market. And if you're going to freak out, at least let it be about what is actually having an impact on you, not everybody else in the nation, right?
Yeah, for sure. And we're starting to see, go ahead. Sorry.
Anything else you want to look at for year over year on this besides just the selling prices?
I think that's probably pretty good. I mean, just to kind of give somebody a feel for where things are at, because sometimes, at least on my end, I get somebody wants to pre-approve for a house, and, we hear, I want to get a house for 500. I'm hoping I can get it for 4. It's like, that's not happening right now. Like, I don't see that happening anytime soon at all. I mean, you may be able to get somebody who's listed on the market at the wrong time for 5 that rolls back and accepts 485 or 490. I mean, that may be there. But I'm starting to see properties come on the market that are priced below where they should be selling for. And we're actually getting our buyers are starting to jump back into that same multi-offer situation again. Are you seeing anything similar on your side?
Yeah, for sure. And I think there's a lot that's going into that, like, big picture stuff. But one of the biggest things that I think of is that the buyers that are in the market right now, because of how interest rates have been over the last year, more importantly, over the last 6 months, they look like they're not paying attention to interest rates because they've stayed roughly the same over the last 6 months. They're like, hey, our rates are somewhere between 6 and 7%, right? What price can I qualify for? Because they're not looking back to see, what could have been. They're just looking at what's in front of them, right? And as long as they qualify and they can buy it and the property meets their needs, great. And our demand is going up because of time of year, right? It's February. This is when, a lot of people who are early birds that file their taxes as soon as they can, they start getting their refunds back so they can do their down payment and closing costs, right? And so the increase of demand because of affordability, because rates have come down a little bit, right? And then an increase in demand because of buyers having a little bit more money in their pocket from their tax refunds, that helps, right? And then something we talked about last week was the down payment assistance programs that are, so it's just kind of this whole storm bringing these, more buyers into the market, which is great. It's fantastic. Like, don't get me wrong, but back to the multiple offer situation, like, that's all good news with the buyers for right now. What I've seen, which is a little bit concerning, is the lack of number of homes coming on the market.
Right.
And I think it's because sellers, are like everybody else buying into the media, like, oh my God, the sky is falling. Now is not the time to sell my house, right? So we've had fewer homes come on the market, which has not allowed our inventory to build up, like, hardly at all. And actually on this little screen here, it'll show, but I'll come back to that in a second. The inventory level is not building anywhere near, and so we still have a very limited amount of homes that are available to buyers in their price range, but we have more buyers coming into the market. So of course there's going to be multiple offers, right? And then, but back to, like you said, homes coming on a little bit lower than maybe what they could. I think that's fear induced on the seller side. If the seller's like, oh my God, I got to get out of here before the, floor falls out from underneath of me, let's go in 5% below market just to make sure that I get out of here before there's a problem, right? So there's just big picture stuff going on, but thankfully it's leveling out pretty well. From what I can see. Like, is it still slow? It's slower than it was. It's not slow. Like, we're pretty well on pace. So for the number of homes that go into escrow versus the number of homes that are on the market, we were like 0.1% under a 20-year average on that ratio. So we're right on track for the number of homes going into escrow that are on the market. But the homes that are on the market are taking a little bit longer. The ones that were on the market are taking a little bit longer to sell. Yeah, it's interesting, but the market does very much seem to be picking up. Sorry, that was a big thought that maybe I should have had you pick apart.
No, it's perfect. And really, if you think about, where the slowness that people are associating, the market's slowed down a bit, it's taking too long to sell my house. The house is on the market for 30 or 40 or 50 days. Guys, remember, that's pretty normal. We were somewhat spoiled with the 4-hour listing, where it was on the market and it was, you put it on at breakfast and at lunch, you checked how many offers you had. That wasn't really normal. That's never been normal. And so this is a more normalized kind of timeline. Yeah. And one of the things that I think is really, really interesting is almost the price points of these homes that it's hitting that first time buyer bucket really hard. So for example, I saw one the other day came on the market at 380, and the buyer texts me, oh my gosh, I got to get this house. Do you think I can get it for 360? And I said, yeah, let me take a peek at it. I'll run the numbers on it. I'm like, there's comps at 450 and 460 on that house. I don't think you're getting it for 360. At 380, you're getting a steal. And so sure enough, wrote the offer. I think they wrote at like 385 and tried to get 5,000 back from closing costs. Multi-counter offer situation, and that home went into escrow at about 445. So it was done to get those buyers who, some of those first-time buyers have a lot of room to move up, and they
Yeah.
just wanted to kind of feed on that energy. And also some of them are capped. They probably can't go over 380 or 390 or something like that, so they're going to be the early ones that are kind of feeding into the frenzy. And then the one that can't afford is like, oh man, there's 4 offers on it, I gotta step up my game.
Yeah.
And they walked away with a house that was still at a relatively good price given the market comparables, but nowhere near the 380 list. I mean, that was listed way too low. And I remember telling the guy, I'm like, if that thing is anywhere close to that, I'll buy it for that price, like immediately. Like
Yeah.
that's a steal on that house. There's no way it's selling at that price.
Yeah. No, it's been interesting. But it's picking up, and that's really, contrary to the media saying that the sky is falling and don't buy a house, shoot yourself in the foot type thing. It's not that here. It's definitely not that.
Well, in one thing going, to pull that story back in, there was one point I didn't make, but it was this: like if I'm the Zillow shopper on my phone, so every night before bed I check all the listings, before I close my eyes,
Yeah.
and I see a new house come on the market at 380, and I'm like, yep, it's doing what I told it. I knew it was going to drop. That house used to be 450 and it's on the market at 380, and I put my phone down and I go to bed.
Yep.
And I know nothing about where it actually went into contract or where it's going to sell at. I just know that I was watching homes in that general area. It was 450. I just saw one at 380. It gives a perception of a massive drop.
Yeah.
What that particular buyer doesn't know is all of those offers that drove that price back up to where it actually should have been.
Mm-hmm.
Now, the reality is they could have come on the market at like 470, 480, done a couple of price reductions, and they still would have sold for 445.
Yeah.
Either place, either way you go, you take this path listing it high, you take that path listing low, they're going to drive to the same exact place. Mm-hmm. But one of the dangers of the market when you list too low and too many offers come on the, kind of like that on listings like Zillow and things like that, where people are looking, is that it gives that perception of a massive decline. That decline actually wasn't even there. It was just really to get a bunch of attention.
Yeah.
So just, if you're seeing that stuff, you have questions, you're curious, reach out to somebody like myself or Mike and say, hey, is that a legit listing price? Because it seems pretty good. A lot of times it's too good to be true, or we call and find out there's a lot of offers on that thing. It's actually being driven quite a bit up.
Yeah. Or another thing that happened the other day, or maybe it's been a month now, took a buyer out and we went and saw, I think it was 4 houses, in a day, back to back. And at the third house, I looked at him and I'm like, dude, like, are we being followed around by people with cameras? Like, I feel like we're on pump right now, because we went and it was that thing. It was like, oh, look at all these houses, like their stats, like their size and, the lot size and all that stuff. Like at that price, that's amazing. Right. And there was 4 of them. I was like, wow, okay, like, let's go see them. Every single one of those houses was complete garbage. I mean, some of them had been renovated, but it was the absolute worst renovation I've ever seen. Like, makes the ones that happened during the REO market look amazing. And like I said, at the third house, I was just like, dude, this is why these ones are sitting so long, even at that price. Like, this is just absolutely terrible. So there's some of that too. Like, some people just come in low and they get bought up, but like those properties, it was bad. Like, I mean, I was just blown away every single time. It was unbelievable.
Yeah, that's the old lipstick on a pig, right? Or that thing.
Yeah.
To get in and out and flip it and kind of walk away with a little bit of cash. You got to cut your cost on how much you're spending on that property. You don't want to lose any money. So if it's a flipper that doesn't have super deep pockets or doesn't understand the market really well, maybe their entry point was too high.
Yeah.
They're going to cut some corners big time. And well, guess what? Who gets stuck holding the bag? The new buyer does, because they start figuring out all of the cheap, shoddy work that was done on it. That's terrible.
Yeah. Thankfully for these, I mean, it was just blatantly obvious when we went in. So we didn't get roped into any of those. And the buyer ended up getting a beautiful house. But yeah, it was interesting. So
yeah, crazy.
Anyway, anything else you want to hit on for year over year?
No, I think you pretty much covered it. I just thought it would be good to kind of dispel some of the myths because I think if you just see this little bit of it, you're missing a little bit of the bigger picture. There's more context around it.
For sure. I agree. All right, Ryan, a pleasure as always. And everybody out there, if you guys have any questions or anything that you want to bounce off of us, feel free to reach out, give us a call, text, or email. We'd love to help you guys.
All right. Thanks, guys.
All right, take care.